Your source for news and information on money. So last week we saw it with Greece, this week it's Italy, and one by one, I mean the European, and this is nothing new, but the European Union is just having financial nightmares. It's the same thing as we're seeing here in the United States again. It's high debt, low production, leads to nobody wants to buy the bonds for the country, leads to no cash flow, leads to government printing money and monetizing debt. What monetizing debt is, it's what quantitative easing is. It's when the rest of the world doesn't want to buy bonds for a country, so the central bank comes in and buys the debt, buys back their own debt. That's why people say it's printing money. That's what's been going on here in the United States. And now that there's talk about European Central Bank monetizing debt to these countries that are struggling on the brink of a collapse in the European Union, I mean, they're saying they're going to have to do something massive, take massive action to prevent a total collapse with the euro. And in the short term, that's driving up the dollar, but long term, this means inflation's coming. Because this means the rest of the world's going to be printing money too. And like I've said before, once the rest of the world starts printing money, the game of inflation is on. And it's not going to be good for anybody, but it's gonna soar metals through the roof until they eventually come out with a new currency. But, you know, in times of uncertainty, gold and silver are used as a hedge against inflation. So at least in the short to mid term, I mean, gold and silver look better than ever. And they got hit a little bit on Wednesday as well when the market dropped almost 400 points. But they didn't get hit too bad. I mean, compared to the stock market. And when you look at where the wealth transferred, it went right into the dollar. The dollar had a frickin' rally on Wednesday while all this was going on about Italy. Because the financial uncertainty over there, just like it usually drives gold and silver, well, and the immediate quick information comes, it drives the competition, the competing currencies up. So when the euro crashes and is having these rough times, that's going to shoot the dollar up. But long term, when you see the whole world printing money, that's going to shoot all currencies down. So it's absolutely insane. We're going to see a lot more bailouts coming to Europe, just like we're going to see a lot more coming to the United States.
Madness with Italy. It was madness with Greece and still is. Now it's madness with Italy. And this madness is going to become madness for Germany. And really it already is too. And all these things are going to push up commodities, especially gold and silver, in the coming future. And you're looking at, it's rallying everything into the dollar right now. You know, it was especially on Wednesday, dollar really rallied with the uncertainty over there in Italy. But this is all stemming from high debt and low production. So, you know, Germany, they're going to have to bail out Italy just like they bailed out Greece. And then by the time they're done doing that, they're going to need their own bailout to keep them going after they got done bailing out Italy and Greece. And they can't cut Greece and Italy out of the European Union because it'll just be destructive for the euro, you know, too big to fail. This time it's countries that are part of a union. So it'll be interesting to see what happens, but either way, I mean, you know, the euro's tied to the dollar, and they're all tied to fiat and central banks, and so, you know, this is going to, until a new currency is created for the world, you know, this is going to be this is going to shoot the price of gold and silver up significantly. And it might be a couple months, it might be a couple years before we really see that happen, but it's going to be pretty explosive when it happens. So the Greek Prime Minister offered a referendum, which is where all the people were going to vote if they wanted the bailouts for the country. And there was so much fear by investors that shot the markets down so significantly that the people would vote no on the bailouts, that they actually pulled the referendum. Now he's resigning. And it just goes to show you, how far the world is from operating like true democracies. So anyways, of course they're going to take the bailouts. I tweeted it before it even happened. What choice do they have? They're on their knees. It's going to be no different when it's us here in the United States asking for the next big round of bailouts. And, it's part of the system.